Texas's housing market is in an absolute free fall, and lots of people are now fleeing the state. This is a crisis now going on in Texas's housing market that suggests that we could see home values plummet and potentially see the local economy go into a recession. And this all has to do with migration, everyone. The domestic migration into Texas has plummeted by about 65% over the last 2 years to one of the lowest levels in the last 2 decades. That plummeting in migration is now causing a massive spike in housing inventory, which is pushing prices down and causing a lot of sellers on the market in Texas to freak out. With many houses now sitting on the market for over a year, where sellers have been forced to do massive price cuts. And ultimately, I actually think this is good news if you live in Texas, because it means that there's going to be more housing affordability coming your way, cheaper home prices, and even cheaper rents. However, if you're someone who bought your house in Texas near the peak of the pandemic, you better watch out because the values are dropping and dropping hard. For instance, on a month-over-month basis, you can see values in Dallas went down 0.56% in April, which annualizes to almost a 7% drop in a year. Meanwhile, values in Austin are down 0.63%, which annualizes to a 7.4% drop in a year. And a 7% drop in prices in a year, everyone, that is huge because housing downturns tend to last 4 to 5 years. So if prices were to go down 7% a year for 4 years, that's a 30% correction right there. And at this point, we need to talk about why are people leaving Texas? Why is this happening? Because we were told during the pandemic that Texas was the new boom state that was going to go up forever, yet now there's an exodus of people and cheaper home prices and a housing market correction and maybe even a recession, which I'm going to talk about a bit later, occurring in Texas's economy. So why is this happening? Well, the number one reason is affordability. Texas lost its affordability advantage that it had prior to the pandemic, and now many local Texans can no longer afford to buy homes or rent apartments, and thus the local population is now being forced to leave and go to states like Arkansas and Oklahoma. For instance, check this out, everyone. The typical home value in Oklahoma is $215,000, which is 30% cheaper than Texas. Meanwhile, in Arkansas, the typical home value is $217,000, also 30% cheaper than Texas. And in Louisiana, the typical home value is $208,000. So you have all of these cheaper states to the east of Texas that are now starting to attract Texas residents. And I know for some people in Texas, that might sound crazy. They're going to be like, what are you talking about? People aren't moving to Oklahoma and Arkansas. Well, yeah, they are, everyone. According to data on Reventure app, the domestic migration rate in Oklahoma is 0.3% growth in 2024 from inbound movement. In Arkansas, it's 0.4% growth. That's higher than the domestic migration rate in Texas, which is only 0.2%. So in relative basis, Oklahoma and Arkansas are now growing more than Texas. If you go a little further to Tennessee and Alabama, these states are now also growing a lot more than Texas. Probably the bigger thing that's slowing Texas's housing market down is that there's fewer people moving in from states like California and New York. There was a big influx of inbound California migration, especially during the pandemic, that pushed the home values and the rents up in Texas. But now that inbound migration has really slowed. There's news articles left and right about how a lot of the people from California who moved to Texas ended up getting fed up with living there. They thought it was too hot, and they didn't really like that the property taxes and utility bills were a lot higher than they thought they would be. So a lot of those people who moved in from California are now moving back to California and potentially other states in the Southwest. And the net result of all of this, everyone, is a massive spike in inventory on Texas's housing market. There's now, check this out, 132,000 resale listings on the market as of May 2025. You can see the long-term average for May is 84,000 resale listings. So we literally have about 55% more inventory than normal in Texas right now, which is a sign of everything I'm telling you in this video about the exodus and fewer people moving in, and is a primary reason why home prices are dropping. And I think home prices dropping is actually good news. You know, in a market like Austin, home values are down over 20% over the last 2.5 years. Rents are down also almost 20% in Austin in the same period. And that means that a lot more affordability is being delivered to Austin area residents compared to 2 or 3 years ago. And ultimately, in the long run, I think that's going to serve a city like Austin, the fact that home values have dropped by so much. For instance, you can see today in Austin, the typical value of a house is $457,000. However, at the peak of the pandemic, it went up to 578,000. So you can see there's been a 20+% price correction in Austin already. The current value is now back to where it was in June 2021. So think about that. In Austin, values are basically at or below where they were 4 years ago, while the median income has continued to rise, which has made the home value to income ratio drop back down almost to the long-term average. So the current home value to income ratio in Austin is 4.49. The long-term average is 4.19. So probably in the next 6 months, Austin will be fairly valued in terms of its housing market. I mean, today, the median household in Austin earns $102,000 a year. That's a pretty high income area. The home values are dropping like a rock. Austin could actually be a good place to buy in the next 6 months if prices continue to drop. But we haven't seen nearly as big a correction in markets like Dallas and Houston as we have in Austin. And this is the important point to understand about Texas's housing market right now, is that it's fairly bifurcated. There's different things going on in different areas, and while almost every area has seen an explosion of inventory, we haven't seen yet an even distribution of price declines. So for instance, while values are down 21% in Austin over the last 2.5 years, they're down only 3% in Dallas in that span, and they're basically flat in Houston in that span. So in terms of price correction, Austin's gotten hit really hard. San Antonio's also gotten hit, but we haven't seen like a crash play out in an area like Houston yet. And we haven't really seen it play out in Dallas yet, although we're starting to see it play out in Dallas, given how much the supply on the Dallas housing market has spiked. I think we're going to see that -3% from peak become -10, -12% from peak over the next year. Interestingly, you can see values have continued to go up in some of these smaller Texas metros over the last 2.5 years. Corsicana, Tyler's up 10%. Longview's up 7.6%. San Angelo's up 5%. Midland, Odessa is up 10%. But I don't think that outperformance is going to last in some of these smaller markets, and here's why. It has to do with Texas's economy. I fear that Texas's economy is entering a major slowdown right now, everyone. And this is a slowdown heavily related to what's going on in the oil industry. Oil prices have dropped a lot over the last year to 2 years across the US. A typical barrel of West Texas crude oil has dropped down to $68 a barrel. You can see during the pandemic, it went up to $120 a barrel. And high oil prices are interesting for Texas's economy because, a lot of people think high oil prices, high gas prices is bad for the US economy because people have to pay more at the pump, but it's actually really good for Texas's economy because Texas is where vast majority of the oil in the continental US is produced. Higher prices lead to more profits for Texas oil companies and higher wages and incomes for Texas residents, and typically boosts the Texas housing market. And you can see Baker Hughes, the big oil company, is reporting a big drop in oil rig count. Back in 2022, there was 782 operating oil rigs in the US. That's dropped down all the way to 559, with Texas leading that decline in active rig count. So you see the active rigs go down. That's not a good sign for Texas's economy. Of course, I don't want to be overly bearish on Texas, everyone. I actually lived in Texas for 2.5 years. I lived in Austin and Dallas, and I actually really liked living there. I think there's a lot of good things about Texas's culture, good things about Texas's economy. The issue is it just got into a big bubble during the pandemic. And when an area gets into a big bubble, it can cause instability in the local economy and housing market and can result in a crash. And I believe we're seeing the beginning stages of that crash play out in Texas right now. And whether you think this crash is a good thing or a bad thing is likely going to depend on where you work, what industry you're in, and if you already own a house or not. If you already own a house in Texas, you're probably not going to like the news I'm telling you in this video as much. If you're waiting to buy a house or investment property in Texas, you're probably going to love what I'm telling you in this video. But I think overall, more affordability coming to the state, coming to cities like Austin, Dallas, San Antonio, and Houston is going to be a good thing because it's actually going to allow the state to grow more into the future. Because we can see today, Texas has 30.5 million people. Texas is the second biggest state in America, right after California, which has 39 million people. Texas has 30 million. And you can see this population count has surged over the last 2 decades. Back in 2005, there was only 22 million people in Texas. Now there's 31 million people. pretty much a straight line, linear, upward shot in growth in Texas's population. But I want to show you why this growth occurred. What I mean by that's the home values, everyone. You can see back in 2005, the typical value of a house in Texas was only $135,000. It was really, really cheap to buy in Texas for a long time. I mean, basically from 2000 all the way to 2014, 2015, it was a bargain to buy in Texas. You could go buy a house in Texas and your mortgage payment, everyone, would be $800 a month for a really long time. I want you to think about $800 a month inclusive of property taxes and insurance. But then look at what happened during the pandemic. That payment rate went up to $2,300 a month, and it's come down a bit since. But this cost of buying a house in Texas is at a level we've just never seen before in Texas's history, and this is ultimately what is causing the issues in the housing market right now with the external migration, with the reduced inbound migration. It's because Texas got kind of expensive to live. To buy a house with a mortgage in Texas right now, a local buyer needs to spend about 33% of their income to buy. So long-term average was 24% of income. Now we're at 33% of income. When will Texas's housing market stabilize? Maybe when this mortgage payment as a percentage of income rate gets back to that 24% long-term average, meaning that a local buyer could spend less than a quarter of their gross income all in on their mortgage payment. I think that's the threshold I'm looking at, this data here on Reventure app, to tell me when Texas's market's going to start to stabilize again. Until then, I think we're going to see more price drops. And right now, I'm going to run through some of the cities in Texas and give you my home price forecast, as well as how overvalued I think prices are in these different cities, because you got to consider both of these metrics if you're a home buyer, investor, or seller, the home price forecast and the overvaluation rate, to help you determine, should I buy now? Should I wait? Should I maybe look in a different neighborhood? These metrics will really help you determine the best areas to buy, the right timing, and will help you actually save a lot of money on your home purchase. We've had a lot of people using Reventure app, home buyers, investors, who have saved tens of thousands of dollars using this data so they can make a more educated decision. Before I get into these exact forecasts, I want to issue a little bit of a warning, and that's that these forecasts will vary a lot by city and zip code. So if we zoom in on Dallas, we can see there's huge variations in our price forecast. The bluer the zip code looks, the more we think prices are going to drop. The redder the zip code looks, the more we think prices are going to stay stable or go up. There's not too many areas in Dallas we think are going to go up, but there's also other areas we think are more stable, other areas that we think are going to crash. And so at the end of this video, I'm going to let you guys know how you can actually look up these forecasts for your zip code so you can have more local insight. But let's zoom out and just look at the different metros. So in Dallas, we think prices are going to drop 7% over the next year. Our home price score is a 30 out of 100. Current market value of 379. We think that's going to go down to 352 over the next 12 months in Dallas. And that's based on the underlying fundamentals, inventory levels, price cuts, days on market. It's all saying Dallas is a contracting market. Prices in Dallas have already dropped 2% over the last year. And remember, they dropped 0.56% last month, which annualizes to 7% in a year. We think that 7% decline is going to come to fruition over the next 12 months. So good news if you're a prospective Dallas buyer, but be careful. You could catch a falling knife. It's going to depend a lot on your zip code. We think Austin's going to go down 7.6% over the next 12 months. This is a market that's down 4.4% over the last year, 20% over the last 2.5 years. There could be another 7.6% decline, which would bring the total correction in Austin to about 30%. In a year from now if this forecast holds. In San Antonio, we think prices are going to drop 6.7% over the next year. This is a market that's already dropped by 6%. So we think in a year from now, the total correction in San Antonio is going to be 13-14%. And we're actually finally starting to see a slowdown in Houston. Earlier, I talked about how Houston hasn't really corrected yet, but I think that correction is starting to show up in the data. The inventory is really starting to go up in Houston. And additionally, we have big variations in how overvalued home prices are in different counties. Some counties in Texas we think are undervalued in terms of home prices. These areas in blue we think are undervalued. These areas in red we think are overvalued. So what you guys should do right now is go to www.reventure.app and sign up for a premium plan on the annual pass so you can see this overvaluation data and forecast data over the next year. This data is going to help you save money as a home buyer and feel more confident about your home purchase and investment decision. It's also going to help you if you're a seller to help you price your home and understand what's going on in your market and if now is a good time to list. You can access those benefits by going to www.reventure.app and sign up for that annual pass. It's $33 a month, which represents a 15% discount. The annual pass is going to get you access to this data over the next year, so you can track it month by month and end up making a much more informed decision and save money on your real estate purchase. And once again, the 2 data points that are most important are the home price forecast score, telling you where prices are heading the next year, as well as the overvaluation rate, telling you how fundamentally over or undervalued prices are. Upgrade to a premium plan at www.reventure.app.